Guys, I love dividend growth investing. It's such a powerful way to invest. I really like it personally. That's what I talk about in this channel. But just to illustrate why I love it so much, what I'm going to cover in this video are the main reasons why I think it's such a powerful investing technique. And I'm also going to show you behind the scenes. I'm going to show you the purchases that I personally made back in March of 2020 during the depths of the crash that we experienced because of the world pandemic. I'm going to be showing you the good investments I made, also the bad investments that I made, and also the meh investments that I made. So make sure you stay till the very end of the video, because that is where I'll be showing you all of this behind the scenes into my portfolio. But before all that, let's begin. What is dividend growth investing? Hello guys, my name is Ricardo Torres. I am the founder of Escaping the Freedom and also Dividend Compass. I'll be telling you more about that in a second. But basically, I'm a dividend growth investor. I've been investing in dividend growth stocks for many years now. And what it basically is, if you're new to this channel, this is a collection of stocks that pay dividends. A dividend is simply an amount of money that comes from the profits that a company generates. If you own shares in a certain company, let's say Pepsi-Cola or Coca-Cola, for example, all right? If you own shares in those, some of those profits are going to be paid to you because you're a shareholder, right? But it's not just good enough that a company pays dividends. A lot of companies pay dividends in the world, okay? But what's tricky is being able to not only maintain those payments, but also increasing them every single year. And that is exactly what dividend growth investing is about. It's about investing in companies that are so good, they're so robust, that they are able to increase their dividends every year so that you as a shareholder earn more and more every single year. And that is my favorite part of dividend growth investing. You actually get paid without having to do any work besides, the initial analysis and, a tiny bit of maintenance in your portfolio every now and then. But besides that, it's purely passive income that you don't have to work at all to be able to earn, okay? This is in contrast to active income, like a job, where you have to exchange your time, right? Time is a limited resource in exchange for money, for payments, for a salary, all right? Dividend growth investing is not that at all. And the best part is that you can do whatever you want with that money. That is cash flow that goes straight into your bank account, okay? Or your brokerage account technically, but you can decide what to do with that money, right? That brings so much freedom into your life. You can actually pay your bills with that money, with those dividends. You can also reinvest those dividends back into buying more shares, or you can just have them in cash sitting somewhere in your house, okay? The point is, you get that cash flow, you get those dividends paid into your account, you decide what you can do with them. And like I said, it opens so many doors because, a fraction or perhaps a big fraction of all your expenses that you spend every month are going to be covered by those dividends. And chances are, and this is the key part, that the next year is going to be bigger than the year before, and so on and so forth. So eventually, after a few years, or maybe even 1 or 2 decades, that compounds over time, okay? It's like a snowball, it keeps getting bigger and bigger and bigger. That's the really cool thing about dividend growth investing. So that was reason number 1 as to why I believe it's such a powerful investing technique. Now, I've got 2 more reasons that I want to share with you, all right? Especially if you're new to dividend growth investing, you're really going to enjoy these. And by the way, if you are at all enjoying this video, make sure to click the like button. Make sure you just tap it, okay? It really helps me. It really helps tell YouTube that my videos are good. And that benefits me a lot, and hopefully it benefits you because you'll be recommended more of my videos on dividend growth investing and also personal finance, okay? With that out of the way, let me tell you what reason number 2 why I think dividend growth investing is so powerful. And that is that when you focus on companies that are able to grow the dividends every year, no matter what, whether there's a virus, whether there's an economic crash, whatever, they're still able to increase that dividend. Guess what? That actually acts like a great filter. It's like you're getting thousands of companies, okay, thousands and thousands of companies, and you are filtering them based on certain metrics, okay, based on certain metrics that tell you how much quality the company actually has, right? And in the end, instead of thousands, you've got dozens of companies, okay, perhaps hundreds, but more likely dozens or even less, right? Those companies are gonna have passed all those filters. They are really, really awesome companies, okay? So it's not just about that dividend, okay? I feel like there's a bit of a misconception in the online investing world, especially on YouTube, that dividend growth investors or even dividend investors, right? They only care about the dividend. It's that in a way, but it's not just because they pay a dividend, right? There's a lot of companies that pay, 15% dividend yield, right? But they are not dividend growth stocks. Maybe they will pay that dividend now, but they're gonna cut it in a few months' time because it's not sustainable, right? It's not that. Dividend growth investing is not that. It's actually being able to choose really high quality companies based on that metric, right? Dividend growth. Because a long dividend growth streak really correlates with your overall return in the stock market. All right, so that is reason number 2. Why I think it's like a little bit of a cheat code. It's like it makes things a lot easier for you. It makes things a lot simpler for you. So that was reason number 2. Now finally, reason number 3, and again, this is especially important for beginner investors, people that don't have a lot of experience under their belt, okay? And that is that dividend growth investing helps you to be patient. And when you're patient, you don't really care about the fluctuations in the stock market, okay? When I saw the big crash, obviously, I'm not gonna lie, a tiny bit of you thinks, ooh, what if it doesn't recover, right? But that part of me is now very, very small because I've got years of experience investing, but also because I know that as long as the companies that I own in my portfolio keep paying me that dividend, keep increasing that dividend, right? I know I'll be fine. That is really the number one metric that I look at when I both analyze companies and also when I do some maintenance in my portfolio, right? I go through my stocks and I say, right, does this stock still belong inside my portfolio? So it is because of those 3 reasons why, I was able to stay patient, I was able to look for dividend growth stocks, and I was able to actually increase my passive income, right? During the big crash that we experienced in March 2020. And what I'm gonna do now is I'm gonna step into my computer and I'm gonna show you the investments that I made and how they've actually played out over time, over the last 6, 7, 8 months, okay? Not quite a year, but I'm gonna show you everything, okay? So let's jump into my computer now. All right, now here we go. Now, all you're going to see now on your screen is using my app called Dividend Compass. That was basically my confinement project, all right? There's going to be a link below in the description of this video, okay? You can just create a free account and you get 14 days free just to try it out and see if it is a match for you and if you enjoy using it, okay? Now, obviously, I've got my personal portfolio here, and right now we're actually looking at my transactions, okay? Now, what I'm gonna do is I'm gonna order by date bought, all right? And let's go to March 2020. Let's actually go to the end of February, okay? Because if we have a look at the S&P 500, it was around the end of February where things began to take a dark turn, okay? I think it was, the 20th of February when I really started investing heavily. Obviously, it went down another, let's see, another 20 something percent, 24%, okay? But obviously I was buying through all of this. And even through April, okay, there were still some stocks that kept going lower and lower despite the S&P 500 recovering, okay? That's what you see a lot of the time. When you invest in individual stocks, you are able to really capture fantastic opportunities, incredible discounts, and as you will see in a second, that is basically what I did with some of my stocks. So basically what I did from the end of February to the beginning of March was just keep building on some of my positions, some stocks that I already owned, okay? I already owned some shares, but I just decided to average down on a lot of these, okay? You've got Wells Fargo here, who unfortunately had to cut the dividend. I'm gonna make another video on dividend cuts, how they affected me, how you can avoid them, okay? Let me know in the comments below if you are interested in that, and I will know to make a video basically, all right? So yeah, Wells Fargo was obviously not an amazing investment because of that dividend cut. So for now, it's not great, but in the future, we'll see, okay? Now, I'm not gonna talk about too many of these companies, okay? We've got Caterpillar, 3M, 2 industrial companies that have been hit pretty hard. because of the pandemic. Actually, 3M has been lagging quite a bit for quite a while. We've got Unum, okay? I bought 2 sets of Unum. I've talked about Unum before, okay? There's gonna be a link here if you are interested in learning more about that company. It's one of those hidden gems in the market that I really like. And as you can see, I put my money where my mouth is. And you know, I bought quite a sizable portion of Unum shares, okay? I also bought some IBM, some ExxonMobil. Again, I've made a video on ExxonMobil, quite a detailed video. It's got quite a nice positive reception. Again, the link's gonna be up here if you are interested. One more purchase of Unum, some TJX, and some Bank OZK. Again, I love Bank OZK, another one of those like perhaps less hidden gems, but one of my favorite stocks, okay? So that was on the 9th of March. Let's keep going, okay? I really wanna talk about those stocks that I started a position in during that big crash, okay? Again, Bank OZK, MSC, all of these ones, I already own positions. Delta Airlines, of course, one of my weakest performers because of what the pandemic has done to airline travel, okay? I'm still not sure what to do with Delta Airlines. But here we go, right? Aflac Incorporated. This was me buying my first few shares into that stock, okay? And thus initiating a position into Aflac. I'd been after it for quite a while, and what I'm gonna show you now is a little bit about the company. So if you don't know what Aflac or Aflac, I don't really know how you pronounce it, that's a little bit embarrassing. It's basically a life insurance company. As you can see, the price, the last 6 months has not done super well, okay? But you know, it's got a really long dividend streak, 38 years of consecutive dividend increases, okay? That's what I mean when I talk about investing in dividend growth stocks, okay? If we scroll down a little bit, we can see that, you know, the average dividend growth rate over the last 20 years has been 14.5%. That is really good. And sure, it has been decelerating a little bit, okay? It now kind of hovers around, you know, 7-9% last few years, okay? But, you know, the EPS has been growing pretty nicely. They've got a really low payout ratio. And if we have a look at how it's performed in my portfolio, you can see that at the moment, I've got a 24% return based purely on the price of the shares, okay? That equates to just over $1,000. My yield on cost is a nice 3.9%. That means that the annual income just from Aflac is $174. And actually, since I bought it, I've already earned $87 in dividends, which is pretty good. Like I said, pretty low payout ratio of 24%. And yeah, I'm basically getting a 45% compound annual growth rate. Bear in mind, that's not that reliable because it's done really well in a very short period of time, okay? I'm not expecting it to continue that way, but yeah, Aflac's doing pretty well. So if we carry on, okay, I bought some more TJX. Again, they've had to freeze the dividend because it's a closed store basically, all right? They had to close their stores. There was no foot traffic, and obviously when that happens to a business, what can you do, right? You cannot keep paying those dividends because you're just not making any money. So, you know, even though I am a dividend growth investor, I am happy when companies, you know, that have experienced something as crazy as what happened back in March and April have, you know, frozen or cut the dividends. I'm not too concerned because it's not that the company is not running well. It's not that they are not making really nice profits, okay? When all things are normal, all right? This is a little bit of a black swan of an event, something that was very hard to predict. So over here, you can see that I bought some more Aflac. And over here, I also made 2 purchases of Oneok Incorporated, okay? I did look it up, that's how you pronounce it, Oneok. And what this company basically does is it has infrastructure to transport natural gas, okay? If I actually have a look at what the company does real quick, yeah, so it engages in gathering, processing, fractioning, transporting, sorting, blah, 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 natural gas gathering, processing, all that really good stuff, something that's actually quite necessary. But because the whole energy sector is so beaten down because of the pandemic, you know, companies like Oneok have been really beaten down. And you know, I bought this company at quite a large discount. In fact, it was such a large discount that the stock price has gone up by 66% in those few months. That means a total performance for my position of $2,300, and in that time I have earned $374 in dividends just in those few months, right? That's because I actually locked down a yield on cost. So yield on cost takes into account how much you paid for that stock as opposed to its current share price, okay? So basically I've got a 21% yield on cost, which is crazy, okay? I never expected to have a stock in my portfolio with such a ridiculous yield on cost. Normally anything that's over 5% I consider high yield. Well, this is 21%. Now, if you bought shares in Oneok now, you'd still get a 12.8% dividend yield, which is still very high, okay? Now, I'm kind of torn about this company. It's definitely one of my more speculative investments, okay? They've got a very high payout ratio. They've got quite a bit of debt, all right? But, the P ratio is pretty low. In fact, the forward P ratio is only around 11. But what I really like about Oneok is its dividend history. If we scroll down a little bit, we can see that it just increases its dividend every year quite aggressively, right? The average dividend growth rate over the last 20 years has been 13%, but over the last 10 years has been 17%, right? Double-digit dividend growth is pretty good. However, if we look purely at the earnings per share, the dividend just simply has not been covered for quite a while now, okay? That's definitely something that really concerns me, okay? But yeah, like I say, this is quite a speculative investment, not something I would normally do. I just couldn't really pass up that 20% dividend yield. And talking about speculative investments, I made another one, and this one was a relatively small position in my portfolio, but this is purely speculation, okay? I invested in LADR Capital Corporation, all right? And the reason I did that was, again, because of that dividend. Now, this is a mortgage REIT, all right? And, it's by no means a dividend growth stock. In fact, if we look at their dividend history, they did increase it from 2016 onwards, right? They cut it a little bit in 2019. But from what I understand, the company is not going to eliminate its dividend, right? It did cut it during March, April. Obviously, mortgage REITs were quite affected because of the pandemic. So that did decrease my dividend yield or my yield on cost to 17.8%, right? It's still pretty good. And in that time, I've gained 57% in terms of the stock, plus an additional $222 just through dividends, because they pay such a high dividend yield. Like I said, total speculation, by no means invest in this company. I don't recommend it at all. I was just kind of seeing what I could get, and so far it's worked pretty well. Okay, let me just show you a couple more investments that I made, because this video is already getting a little bit too long. And you've got better things to do probably than watching this video. Of course, if you're enjoying it, again, just click like, and that really helps me out. But the other stocks that I bought during the crash were Marathon Petroleum, 73% change in stock price, plus $35 earned. Again, very small position, only a few $100s. I'm not completely convinced by this company. I just saw opportunity. And I'm probably gonna sell this company eventually, all right? I just saw such great opportunities during that crash, companies that I know were worth way more than what they were trading at, okay? And this is an example of such a company. I don't expect this company to increase its dividend that much. And another one that perhaps wasn't such a great investment was Meredith Corporation, right? They are a publishing company, and they basically own a lot of magazines and a lot of online magazines that I think they reached like 95% of the women in the US, is something crazy like that. And before they actually, unfortunately, kind of paused the dividend, meaning that they're not paying a dividend at the moment, before that, they had quite a long dividend growth streak. It was more than 20 years, right? So that's actually why I bought this company. Now, when you look at the dividend trajectory, look at that. Like from the year 2000, they increased the dividend by somewhere around 10%, and in latter years around 5%. Now, what struck me was that the earnings per share consistently covered that dividend fairly well. Even in the last few years, the payout ratio was just below 70%. Obviously, they did that for cash preservation, right? Again, I don't really blame companies. Like I said before, I don't really blame these companies because of what's happening in the world and how unprecedented it was and it is, okay? So again, I'm not necessarily too concerned about Meredith and whether they'll resume the dividend. I'm pretty sure they will, because it's the kind of company that does that. So consequently, this is actually the only company that I bought during that time that's actually making me a loss at the moment, okay? 5% or $132 loss. and I've actually earned 0 dividends, okay? I didn't buy it in time before the dividend X date to earn their last dividend, right? So it's just a bit of a shame, but I'm still gonna own it. Hopefully it's gonna do pretty well. But I'm still gonna own it. I think the business model makes sense, and they're a pretty well-run company, okay? So I'm gonna hold it for now. Okay, on the 23rd of March, 2020, I bought 25 shares of Lowe's companies. Now, again, I've made a very detailed video about Lowe's. You can find it by clicking here, where I go really deep into the company. And I do say that I got quite a nice yield on cost based on what you can actually buy it for at the moment. And as you can see here, you know, I've made an incredible amount of gain purely because it was so undervalued at the moment. I couldn't quite believe it. I've actually got a 3.7% yield on cost, when if you actually buy it now, you can only get a 1.5 dividend yield. I love Lowe's companies. It's fantastic company, and it's got 57 years of consecutive dividend increases, right? That's how crazy this is. Think at how difficult it is for a company to be able to do that. This is a really high quality dividend growth stock. Again, if you're interested in learning more about that, you know, click on that link that I showed earlier. Just to show you real quick, all right, this company increases its dividends and its earnings very nicely and very quickly over time, okay? You can see that the average 20-year dividend growth rate is over 20%, which is mind-blowing. But the earnings has actually grown by pretty much that same amount, because the payout ratio has kind of remained anywhere around, you know, low 30s to mid 30%, right? That's a really nice and manageable payout ratio. So this is one of the best purchases that I made during the pandemic. And there was one last stock that I was very proud of being able to find at pretty good prices, and that was Parker Hannifin Corporation, ticker symbol PH. I bought that on the 20th of March 2020, and again, a really strong return of 90, almost 100%. Okay, I've almost doubled my money in the last few months, and I've also earned, well, you know, $35 in dividends. It's nothing to go home about, but this is a compound annual growth rate of 212%, right? Something absolutely crazy. But just like with those companies, I bought another dividend king. Again, if you want to know what dividend kings are, I'm sorry for doing this, but there's going to be a link here to a playlist about what dividend kings are, right? They're companies with a dividend growth streak of over 50 years. And Parker Hannifin is one of them, right? They've been increasing the dividend since 1957, which means 63 years. Really nice payout ratio, very good return on equity, very good interest coverage. The debt is a little high, which I don't love, but check this out, right? Once again, really nice dividend growth. They increase the dividends every year, even though it is a little bit more cyclical because it's an industrial company. That's why their earnings are a little bit more cyclical. The payout ratio is still very small, okay? No, it's normally below 30%, which I really like. It means that the company has ample space to keep growing over time. So there you have it, the investments I made during the crash of March and April 2020. You know, a terrible time in the world, but you know, I actually took advantage of that. And you know, when you're a dividend growth investor and you focus on that dividend growth and really high quality companies, not that all the companies that I bought are high quality, but most of them are, in my opinion. When you focus on that, it's very easy to find fantastic companies that are trading at, you know, way below their fair value. And that is finding opportunities, you know? And that is exactly what I've done with these companies, right? I've locked down those prices, I've locked down those yields, right? And from now on, assuming that the dividend is at least maintained, I will earn that income. And, you know, that can go to pay some of my bills. That can go to, you know, pay a night out in the town or whatever, okay? That's the beauty of dividend growth investing. And hopefully this video has been entertaining or educational. I'm by no means recommending that you buy any of those stocks. However, if you want to check out Dividend Compass and just, you know, upload your portfolio, analyze companies, just try it out yourself. There's a link below this video, okay? dividendcompass.com. Just create a free account and you get 14 days completely free, okay? No credit card required or anything. I really hope you enjoy it. And once again, guys, thank you for watching this video. Make sure to subscribe if you have not subscribed already. I'm now going to get back into making videos like this every single week, okay? At least that's the promise that I've made to myself. Yeah, guys, that's it for me for now. I will see you in the next video, okay? Have a really nice day. Bye.